Thanks everyone for coming this afternoon. My name's Greg Smith. I'm the president of Equinox Gold. So Equinox Gold, we're a year ago, I guess, when I was at this presentation or did this presentation, we were a gold developer and an up-and-coming gold producer. And we had just announced that we were acquiring the Mesquite mine from New Gold. That transaction closed shortly after this conference, and that launched Equinox into a gold producer status. Since that time, we've completed the construction and commissioning of our Aurizona gold mine in Brazil, and so we now have 2 mines in production today. And our 3rd mine, the Castle Mountain project in California, we're just starting the construction of that mine, and so by this conference next year, we'll have all 3 of our gold projects in production. So from 0 ounces last year at this time to around 200,000 ounces of production this year, and next year approaching 300,000 ounces of production. So Aurizona, I just came back from this mine yesterday, and it's fantastic to see. This is a mine that we spent about a year and a half developing and putting into construction and commissioning. The mine's operating great. It's in northeastern Brazil, 8,000 ton per day open pit gold mine. Aurizona will do about 130,000 ounces of gold per year at around 800,000 or $800 all-in sustaining cost. So this is really our first month of production was in June. We did 700,000 of pre-commercial production ounces. It was a fantastic startup. Mine got to its full capacity very quickly. In about 2 days, I think Wednesday afternoon after market, we're going to release our Q3 financial statements, and everyone will finally get to see how Aurizona is doing in real time. That'll be our first quarter of full commercial production from Aurizona. But very, very happy with the performance of the project so far. So now that we've built Aurizona and it's producing gold, we can finally get back to the business of exploration. And you can see in the middle of the screen there, the Piaba open pit, that large pink pit there, that's where our 1 million ounce, around 7-year mine life currently exists in the open pit. But this is a very, very prospective district, and you can see the Tatajuba target, which is a long strike from the Piaba open pit. Tatajuba is very similar to Piaba, same kind of geology, same structure, same to higher grades, same kind of strike length. So Tatajuba is where we believe we can double this mine life fairly efficiently. We finally have drills turning at Tatajuba again as of mid-September. We're starting to get core out to the lab, and we should start getting results from those assays over November, December here. So finally back in Tatajuba. Ideally next year we can incorporate an initial resource at Tatajuba into our overall resource for Aurizona. Before I move from this slide, you can see east of the Piaba open pit, there's Genipapo, Makote, Mestre Chico. These are very prospective areas where we anticipate finding what I would call satellite pits, so smaller pits, near surface, soft material, but high grade that we can incorporate into the mine plan. And then to the north of Piaba, you can see the Piaba North Trend. That's an area where there's been a fair bit of artisanal mining along a multi-kilometer strike length. We've never done any drilling there, but in the fullness of time, we'd also like to get onto that target as well. So lots of very near mine exploration potential, and something like Tatajuba in the near term is one of the best uses of capital we can do, because every year we add to that mine life accretes to our bottom or to our NAV of the project, net asset value of the project. So we started talking a lot more about the underground potential at Aurizona. The open pit at Aurizona will go to around 250 meters, but the mineralization, the structure, persists all the way down, and we've intersected it at 600 meters, and we believe it goes a lot deeper. So the deposit itself lends itself well to bulk underground mining. We've done an internal desktop study. It looks really attractive for the addition of an underground mine at Aurizona. And so next year, we'd like to enhance that study and hopefully get something out publicly to the market. But in the fullness of time, we believe that there absolutely will be an underground mine at Aurizona, and that this project will be a mine that's operating for decades rather than the current 7-year mine life. So Mesquite, this is the mine that we just bought last year. Mesquite's been operating for a long time, since 1980s. It's produced over 4 million ounces of gold. This is a very large open pit run-of-mine heap leach project in Southern California. We paid $150 million for this a year ago. So the first half of this year at Mesquite, we produced about 52,000 ounces, all-in sustaining costs of $900 an ounce. So this mine is making a nice margin for us right now. The second half of this year, we're going to produce even more gold. So we're anticipating around 125,000 ounces of production at Mesquite in 2019. You can see the overall layout of Mesquite here. Some of the things we're working on at Mesquite are extending the mine life through in-pit and near-pit exploration, also expanding our heap leach capacity into an area to the east of the current heap leach pad. This is a mine that has been around a long time. There's about 1 million ounces in reserves, another 2 million ounces in resources, and we're going to continue to look for ways to continue to expand this mine life and operate Mesquite for a long time. So Castle Mountain. Castle Mountain is about 200 miles north of Mesquite. We kind of operate these mines together in a way, same administrative team. Castle Mountain was a previous operator and so has existing permits, about 3.5 million ounces of gold in reserves. Castle Mountain's a mine that we're going to develop in 2 phases. So phase 1 will do 45,000 ounces a year for 1 to 3 years, although we could keep going, but what we really want to do is permit phase 2 as quickly as possible and increase the production from this mine to 200,000 ounces a year. So it's a very attractive long life mine in the United States. We just recently have started our initial construction activities at Castle Mountain, and within the next few weeks we'll be able to announce that we're formally in full construction. We are aiming to be in production on phase 1 at Castle Mountain by mid next year, so hopefully by this time next year I can stand up here again and show off the initial results from Castle Mountain phase 1. So this slide is interesting for a couple reasons. We recently consolidated our shares on a 5-to-1 basis, and we did that in order to list on the NYSE American. So in September that was completed, and we now have a proper NYSE American listing. We also have brought in a very strong financial partner in Mubadala, which is the Abu Dhabi Sovereign Wealth Fund. They invested $130 million in convertible notes earlier this year. And at the bottom of the slide there, you can see that our trading has gone in 2017 from 300,000 Canadian dollars per day to now, over 3.5 million Canadian per day. And that's important because Equinox right now isn't on any index or ETF. And because our liquidity has increased, because our market cap has increased, next year we see visibility to between 10 and 20 million shares of buying just from inclusion on indexes like the GDXJ. So we're going to have some momentum in terms of our addition into those indexes. We're going to have results from Aurizona as a commercially producing mine. We're going to have updates on Castle Mountain going into production, our third mine. And so hopefully we can start moving up this value curve. We're still trading at 0.7 times PNAV multiple. And I think in part that's what a developer trades at. I think in part because we only a year ago had no production. Now we've got 2 mines in production very quickly, a third on the way. We're going to be in these indexes. We're going to continue to increase our liquidity. And hopefully we can start moving up and see that multiple expansion at Equinox. So this year, like I said, we're going to do around 200,000 ounces of gold production, sub $1,000 all-in sustaining cost, focusing on mine life extension at Aurizona and Mesquite and construction of phase 1 at Castle Mountain. We're going to be looking to graduate to the main board on the TSX, hopefully get some of these index inclusions happening next year. And we've got a vision at Equinox, a long-term vision, to get to 1 million ounces of production responsibly and accretively and build a company of some scale. We want to do that by 2023. In order to do that, we got to continue looking for attractive opportunities and mines that we can acquire. Certainly easier said than done, but we are looking for deals and projects that we can buy to continue to increase our production base at Equinox. Thank you.